Hey everyone, welcome to the Token Warrant. I'm Mike Zajko.
I'm Regan Bozman.
Awesome. And we've got a special set of guests today. We have Marcin from RedStone and Callaghan from Arrington. And we're going to be talking about RedStone's recent Series A, which Arrington led, and talk about the Oracle market and what's exciting about RedStone. So why don't we just jump right in? Maybe Keli, let's start off with you. If you could tell us a little about you and tell us a little bit more about Arrington, and then we'll go over to RedStone.
Thank you for having us on here. Excited to be here today to talk about this exciting space. My background, I've been full-time in Web3 for 6 or 7 years now. First fell into it with a role at Algorand out of Boston, Silvio Micali's project out of MIT. Grew that for about 4.5 years. I was there, one of the early employees, grew that to a pretty large network, and left a couple of years ago and joined the Arrington team, where I get to support our founders and help make new investments and all of that.
Yeah, there's definitely a little bit of a Algorand mafia in Boston. I think you're the third person that we've had on the show that previously worked at Algorand and now is either at another venture fund or another project. So seems like a good diaspora that you guys can probably leverage.
You know, you forget that Algorand was one of the only things happening back in 2017, 2018 that didn't have a direct tie to Ethereum. And so it was really one of the first things that was like very, very different, right? I mean, there were EOS, there was a handful of others, but it was a pretty unique take on the tech and super smart people that were there in those early days, for sure.
Yeah, the Silvio Turing Award definitely always got a lot of attention in the crypto media.
Mm-hmm.
Yeah, it's near and dear to our heart because we worked on the token sale when we were both at CoinList. We talked about on the last episode with someone from Algorand, so I won't rehash it too much here. But yeah, there was a exciting time, I'm sure, for you guys in 2019.
Yeah, and then just to double click on Arrington. So I've known Michael Arrington for years. He was involved at Algorand. He was very supportive, super supportive on what the team needed, support we needed for the project, publicity, all of that. And so I get to carry on that torch of doing for other founders what he did for us back in those days. And I love doing that. And Arrington is a hedge fund with both a liquid trading side as well as over 250 private venture investments at this point, being 6 years old as a fund. So it's super fun. We love our founders. We love making new investments and technical founders, very early stage. And that's who we are as a fund.
Actually, I've been curious. I don't really know this, and maybe a lot of people that are listening don't know either. But when did Mike catch the crypto bug exactly? Because I was like TechCrunch is the namesake, but like when did he come over to the dark side or the bright side, depending on how you look at it?
He came over to the bright side, Mike. That was back. Wait, you know what I'm doing? He has a pinned tweet. October 6th, 2014, he bought his first Bitcoin. So nice. He's been around for a while.
Very cool.
Well,
thanks for that. Yeah, thanks for the background. Yeah, Marcin, how about you, the Polish Falcon over there? Very few in the crypto industry, but it seems like a budding hotbed of crypto. But yeah, tell us more about you.
Thanks a lot for having me, Mike, Regan, Keli. Good to see you again. Actually, there is a lot of specialists in the crypto space from Poland. Not many people know, but in OG MakerDAO Mafia, there were probably like half of the team was Polish. They just weren't super vocal about that. And there haven't been that many teams that originated in Poland, let's say. But as Mike already mentioned, I live in Warsaw, and that's where I come from. Joined the crypto sphere in late 2017. Wrote my bachelor thesis about blockchain, Bitcoin, how it works, because I graduated quantitative methods in economics, and I was always fascinated by a concept of creating your own monetary policy, because from like university perspective, this is what creating a token was to me. Then I worked in the first startup. I got scammed in crypto, didn't get 3 months of salary. So let's say I started with burning my fingers a little bit. So I thought to myself, okay, crypto is cool. I will keep track of it, but I need to make some real money somewhere else. Therefore, I went to some other startups and then eventually Google Cloud in 2019. And late 2020 was when my old fellow Jacob reached out to me with the idea of disrupting the Oracle space. And I had little hesitation to join him on the journey to build a new Oracle. And here we are a couple of years later.
How did you mentioned old fellow, you and Jacob, and that's the other co-founder of RedStone. That's not in this conversation here. But yeah, how did you guys know each other from crypto or from hanging out, drinking, Polish vodka and eating pierogies? What was the backstory?
Yeah, funny enough, I believe I've never eaten pierogies with Jacob. Maybe that's something to do after our Series A. Well, we did to get to know each other in this crypto startup. I got a little bit scammed. Like, he wasn't involved in the scamming part, but he was the most respected blockchain architect in Poland in the region at the time. So many times he was the one advising on the technology, infrastructure stuff, and so on. And very early I spotted that he is a genius. And I would like to work closely with him and also learn from him because myself today, I'm 27, whereas Jacob is, as far as I remember, 40 or 41. So there's also a slight difference in age between us. And I respect a lot all the experience that he's bringing to the table. And in many aspects that I can learn from him.
Yeah, that's cool. Yeah, I remember Jacob. Was pretty deep in the Ethereum community, even back then. If I recall, like hosting some of the Ethereum meetups in Poland and very active in that community.
Yeah, he was the one to create the first tech Ethereum meetups in Poland. So he was inviting a bunch of devs that were interested in these things called smart contracts to show them how not to do rookie mistakes or
like get scammed.
how to identify not to be scammed in 2019 and 2020 when so many food projects were popping out. I believe all of us remember that. And even before, when he lived in London in 2014, 15, 16, as far as I know, he was a winner of one of the first Ethereum hackathon in London, which back then was like a very small thing, right? You remember the times of 2015.
Definitely. But this was a pretty audacious goal in 2020. I mean, Chainlink was just totally crushing. So what was the initial insight that he came to you with that got you? I mean, obviously you were impressed by him, you'd worked together, but like very difficult market, continues to be very competitive. But like at that time, Chainlink was definitely on top of the world. So curious how he approached you and what you got you excited to join up.
Well, Oracles is an essential piece of Web3 ecosystem and end-to-end flow in terms of execution of any interaction. So this is simple thought. There is one leader that is not scalable. And you have to say that the model that Chainlink introduced is elegant, is simple to use, but it's not scalable with the amount of data that should be delivered to blockchains and with many blockchains popping out every day. Maybe not every day, but let's say every month. And you never know which one is going to nail it in the early days, at least, right? So Jacob saw the opportunity to create something that is scalable into the coming years. And the legacy approach is going to bite someone's ass in the end, right? The real reason why he picked up that idea was he won a New York Blockchain Week hackathon in 2020 together with Synthetics core members, core contributors, where they wanted to create a leverage Synthetics trading platform for which they needed a couple of simple price feeds from Chainlink. They requested them, and after waiting a couple of months, not weeks, even months, he said, okay, there is like a structural problem. If Chainlink cannot provide these feeds, what is that problem? And it turned out that one, the maintenance and creating new price feeds with the push model is just expensive to set up for Chainlink. And two, pushing data on chain is also expensive in terms of the gas. So these were like the two core problems he tried to tackle when he started exploring alternative storage solutions. And he came across Arweave, where he joined the very first incubation program in 2020. And that was the moment he reached out to me. I saw the huge opportunity of Oracle space being crucial for the market and also not so competitive because there are not many specialists in the world that can create an innovative end-to-end flow for oracles. So truly, I had little hesitation out there.
Maybe something that'd be helpful is talking through this modular approach that RedStone takes. Obviously, modular is a big, buzzword in crypto, and I'm sure we'll dive into it more in this throughout the conversation. But what is a modular oracle? Why does it matter? You, for instance, are using Arweave or in some component. So, what's a modular oracle for our listeners?
As simple as it might sound, modular oracles means that our oracle has modules. And these modules don't need to be tweaked or updated or changed in specific actions to get certain results. Here we are talking right now at RedStone about 4 major modules. One is the data sourcing module, so getting data from sources. RedStone node operators modules, where RedStone data providers get that data. RedStone data distribution module, where data is aggregated and passed, transmitted to anyone to pick up signed data package. And the very last module, which is data consumption module. And here, with the 3 first modules, you don't need to update them if you go to a new network. So whenever you go to a new EVM ecosystem, then you have to do very little change in the whole setup to be present there. And if you go to a non-EVM, non-Ethereum virtual machine compatible ecosystem, then you have to tweak just the 4th module, and the 3 previous ones are literally the same, because the primitives of signing data packages and then verifying them on chain are very similar across many blockchains. There are very few that have breaking changes in terms of that end-to-end logic. So via this modular approach, we created a flow that is just more scalable. As I mentioned at the very beginning, Jacob wanted to do something scalable by principles, by the design that is introduced. And this is how we did that. And I would say even more, when we want to add a new price feed, so some new data feed, many times we have to update only either the data sourcing module. So for example, add a new DEX that popped out there. For example, we did so with Maverick when it became a thing in DEX's world, or the data provider module, so that the provider aggregates data about a new coin that popped out there. For example, when a new LRT, liquid restaking token, comes into the existence of the space, for example, recently PZETH from Renzo, we can fairly easily add that. And many times we are the first oracle to deliver that. And it's the best that time to market is crucial in the Web3 world.
So yeah, Marcin, obviously we're recording this conversation in the context of the Series A you all did with Arrington. Maybe taking a step back, would love to just understand the fundraising history from the start. Jacob's selling you on this vision, you come over and join him. What do you guys do next? And tell us about kind of getting the initial capital to get off the ground.
Happy to. So here I have to open with a huge thank you to the Arweave ecosystem and also the co-founders of Arweave that were extremely supportive in the very first days of the idea. So as mentioned, originally we were called Limestone at the time. We came out of the Arweave incubation program in 2020. And at the demo day, at the end of the incubation, there were a bunch of investors listening to what we basically created. Some of these investors were our later backers, like 1KX, Kryptonites, Maven 11, that led our pre-seed round, Bearing Waters, and plenty of useful angels. That's how we made our first funding round, which was pre-seed, that was officially closed in March 2021. If you remember correctly, this is also a pretty hot market. So we are asked to deliver the platform very quickly. So here we are still talking about not ready products. So we haven't even launched that, and thankfully managed to close that round. And then in late 2022, as the market was still very hot and we did the progress, early in the days, we got approached by a couple of investors if we wanted to raise seed round. And basically, that's what we started to do, which eventually closed in April 2022, so about a year after pre-seed round, where, of course, Lattice was also one of the funds that helped us to pull it out together. Lemniscap was the lead. We got pretty good names with Blockchain Capital, Coinbase Ventures, Arweave again, topping up, Maven 11 topping up. So yeah, that's how we did the pre-seed and seed. And actually in 2023, that's an interesting one. Usually you get angels in the very first pre-seed round. But we identified in 2022 that people started realizing that Chainlink might not be the ultimate solution for the whole industry forever. Like, it's for sure net positive actor, and they're bringing a lot of value, but there will probably be more players that offer specific solutions to some of the problems of the industry. So when at E4, so 2022, I had the pleasure to get to know Stani, that apparently knew Jacob from DevCon 2018 or 2019, like back in the days. When Stani learned that Jacob is creating an Oracle, he was like, hey, can I invest? And I said, well, we are after seed already, so it's pretty later stage. And he said, it doesn't matter. Like, this builder is excellent. I know how good he is from the technical perspective. I just want to be a part of the journey. Then Sandeep, when learned that Stani is investing, also wanted to chip in. And we ended up creating an angel round for high-profile individuals in 2023 May. We announced that eventually. And now, with Arrington leading our Series A, we closed the $15 million round.
You guys were like pioneering the KOL round before it became hot. Definitely want to talk about the Arrington round, but I think just like one question early on, I'm curious. I mean, you mentioned meeting some people at ETH Warsaw. How did like being based in Poland, you think, like impact the fundraising process? Obviously not like a historical hotbed of like crypto focused venture funds.
For sure, we couldn't seek capital locally because the venture capital firms here locally or even in Central Eastern Europe first don't have the size of capital of international ones. And two, many times they are not even capable of investing only in tokens, which is the legal boundary that they are meeting with their LPs that invested into the fund itself, right? Therefore, we, from day one, had to seek for investments from international folks. What helps us a lot being in Poland is its tremendous pool of talent over here that is hungry for success. One thing I heard a lot from US-based founders is that there's a bunch of people working in this space that are just looking for the highest salary or the shortest token vesting schedule, or essentially just making a quick buck. It doesn't mean these people are not good professionals, neither that they are not doing a good job. It just means they are usually short-lived in a cycle of a company. Whereas here in Poland, there's a lot of very hungry people willing to get the international exposure, and then they stay, I wouldn't even say loyal, they stay dedicated to the company and create a really nice pack. So one statistics I can pull off over here is that since day one of RedStone, there hasn't been a single person that intentionally left the company. We had some misfits that unfortunately we couldn't, let's say, extend the cooperation because the bar is very high at RedStone, I can tell you. We basically push people to swim in a deep water and see if they are capable of swimming or not. But there hasn't been a single person that individually decided to leave the company.
Yeah, I mean, obviously, y'all have been able to recruit a great team, and I think just like seeing how efficient you guys have been able to be with capital, building from Poland, it's been really impressive. Maybe fast forwarding, obviously, like, would love to just like talk about this round. Like, how did you all decide that now is the right time to raise the A? How did you all end up talking to Arrington? Like, how did this all come together?
Starting with talking with Arrington, here I have to say again, thank you, Mike, for the intro with Keli that happened at Messari Mainnet 2023 in New York City, when I said to Mike, hey, in some time we'll probably be opening Series A. Is there anyone in your network that I should meet in New York City? And naturally, he connected me with Keli. We had a really good lunch together at the Real World Asset Summit in New York. That was a good opening. Then at ETH Denver 2023, we saw the signals of good traction on our end and also interest from investors about investing basically in the next round of RedStone to get more capital, to increase the team and go to market quicker. But I would say the biggest inflection point was the moment when we had to have about 3-4 week queue ahead of us of good clients waiting for us to deliver the new price feed or come to a new chain that we couldn't handle because of the size of the team. So we saw the demand was very strong. The brand is started being recognized. Also, people realized that Chainlink is a very positive actor in the game, but cannot probably suffice the demand of on oracles in the whole space with so many chains and so many assets that are required in the DeFi space. So we decided to start raising the round, and ended up with fantastic investors, and we are super happy with that.
Keli, switching over to your perspective, like, would love to understand, were you all like looking at the Oracle space actively? Obviously, I'm sure you're familiar with, Chainlink and some of the larger players and looking to make an investment there. What's y'all's history been there? And then, would love to just like hear your point of view on kind of how the round came together.
We're very early stage, so the earlier the better. And right now in this space, there's still a lot of technical things than there are consumer apps or some of the other, although I think that's starting to change. I have to give a shout out. Marcin brought up the Real World Asset Summit. You have to give a shout out to all of these great companies that are putting on these very robust and diverse events where a variety of funds and founders have the potential to meet up and discuss some of these trends. So kudos to the RWA folks and Centrifuge and the rest involved there, which is where I first sat down and chatted with Marcin about what he's doing. For us, the other thing is we're really looking at teams and we're really looking at their approach to things. So it might not be their initial out of the gate tech, but it's the attitude that they have and the vision that they have. And I think for us, when you look at the Oracle space, the infrastructure is evolving quickly. Some of the legacy players are expensive and not as easy to use for new projects. We started talking earlier on this podcast about modularity, but if you break it down and step back just a little bit and boil it down to basics, I think what RedStone offers is flexibility, more flexible price feeds that can cater to a variety of different use cases, that design that allows for more tailoring of specific use cases. I don't think we've gotten into, and we probably should from Marcin, the chain agnostic element that RedStone brings and how that's really an ideal partner and solution for people that are building on emerging networks that are still up and coming. And I think just the basics of how they're doing, the core pull data and the classic push and how they're able to sort of fit everything that anybody needs, it's much more efficient. And when you look at implementing something that can be more flexible, that can be more cost effective, that it can be more efficient, I think their design is really unique. And, from a founder's perspective, the team is really killing it on BD and partnerships and how they're getting people to use RedStone over some of the other stuff that's out there.
Awesome. Thank you. That's a great interlude. I think Marcin, would love to just understand some of the technicalities of your approach to building an Oracle, maybe understanding what chain agnostic means in this context, maybe how Chainlink approached it from day one, how that's changed how they've evolved. And then I think also just like for people who aren't familiar, understanding the distinction between a pull versus a push architecture in oracles would be helpful.
Of course, happy to. So historically, even before Chainlink times, people were building oracles their own. If they needed a specific price feed or some data, they would just create a module that delivers that from CoinMarketCap or empty GOX itself back in the days when the exchange was still live. And here we can see like two problems. For example, one, empty GOX goes down, your oracle stops working, right? So this is the first problem of a single source of failure in terms of the sourcing data. And then in terms of CoinGecko, for example, or CoinMarketCap, these are like fantastic products, but many times they are not super accurate about less popular assets. So there might be some glitches from the data source itself, so there is not much redundancy in that term. Therefore, Chainlink came with the idea of their DON, decentralized oracle network, and delivering the price feed on-chain, initially Ethereum itself, within a specific time interval, for example, every 24 hours, and deviation threshold. For example, every time the off-chain source is deviating by 1% from the last on-chain update again. This is essentially the push model that has been popularized by Chainlink, and how exactly they managed to be the only so well established player in 2020 and early 21. Honestly, I'm not sure. For sure, like good ICO and very aggressive go-to-market strategy helped. But with that quick expansion and early design choices that were made in 2018, it's very, very hard to update them because the architecture they started with is actually monolithic. So they created a very good pipeline for delivering data in Ethereum in the push model. And that's how it started. Then they started to add like new modules and features. But basically, this is the core that since 2018 hasn't changed that much. Naturally, there were some patches, but I wouldn't say there was any tremendous change. Now, RedStone was designed in 2021 and implemented over then with the promise of this modular oracle, so that when any of these four modules has to be tweaked or updated or changed, then we can do that without touching the other ones in many cases. Therefore, in example, restaking wasn't available when we were even designing RedStone, but we knew the concepts from Cosmos ecosystem about like shared security and some cases of like staking assets to protect against attacks and so on. So we knew at one day probably such a technology is going to come to Ethereum as well. In the third module of this data aggregation and data distribution layer, we are right now working on eigenlayer, symbiotic, and Karak to test out a module that would aggregate that data with the restaked security involved, which is like a very good game changer in the long term regarding the, let's say, cryptoeconomic security of an oracle itself. Pull model, in contrary to the push one, is when data is delivered only when it's needed. You can call it on demand. Only when a user is interacting with a protocol, a specific dApp, let's call it Gearbox or Morpho or something else, only when the user is interacting and is doing it in a way that requires the price feed. So, for example, opening a position, closing a position, or there's a liquidator liquidating a position, only then the price feed is fetched from this off-chain source, so data distribution layer, and delivered on-chain to the smart contract. Signatures of data provider that delivered that price feed is verified on-chain, and the transaction is being executed. And how at least RedStone is doing that pooling of data is we are using the concept of cold data in every transaction in Ethereum virtual machine compatible networks. And if we go outside of EVM, many times there is a construct of passing arguments together with a transaction. For example, on Fuel network or Movement and so on. It's fairly similar logic. It just the implementation is slightly different. So this is like the major difference between the push and the pull oracle.
Oracles are interesting, and like they're one of the few really proven markets in crypto, right? Like Chainlink's had a big business for years. Like every crypto product needs them, and related to that, it's like one of the most competitive markets in crypto, right? There's you guys, there's Pyth, there's Chainlink, there's a lot of players. Keli, would be curious on your side, like when you look at markets like this, and there's a lot of competition. How do you kind of like evaluate the landscape and think about moats? And then Marcin would also just be curious on kind of how you all think about like building a brand, building a moat in the Oracle space.
It comes down to the team and it comes down to the tech. I am not a developer. I have never built or integrated a price feed or a data feed, but we have people on our team that are far smarter than I, that are sort of looking at the tech that's out there and how easy it is to use and what ecosystems are using what and what challenges they're running up to. So I think it's about just having a good line of sight with people that are very deep on those areas. And then it's also the team and what they're able to do and how they see that space. Because more importantly is how the founders and how the people that are driving that vision see the landscape and see what's possible and see what can be appended and what can be done better. We think the RedStone technical approach is super interesting. What Marcin was talking about, the push-pull model. And then I think there's also another one like on the perps where you can front run some of the models that are more sophisticated, right? We should talk about that one too. And, so I think it's those things and then how those play against what's there and also the team. I know we get to talk a little bit about the go-to-market. I know I didn't know that it was originally called Limestone. I don't think I ever heard that story and why RedStone and the RedStone vests. And I know those are becoming a thing. I got to go look for one. But I think that, Regan, that's sort of what it boils down to, right?
Yeah, one of the interesting things about the Oracle space is, and Keli, I'd be curious if you were paying attention to it, is everyone talks about total value locked in DeFi, and the Oracle space has this other metric, total value secured, which is a ranking of the amount of DeFi effectively an Oracle is securing. Was that something you guys were paying attention to? Because clearly, like, if you were paying attention to it in late 2023, early 2024, like, you couldn't help but see RedStone kind of rocket up the rankings. Maybe you can kind of share if that was like a big driver of some of your confidence in their ability to execute.
Early signs of product market fit, right? They've got traction, and it depends on when you're coming into a round and when you're looking at it. If you realize that it's so early that they haven't proven out that product market fit or that MVP versus where RedStone was, where they had they'd sort of proven that. And that's one of those metrics, Mike, that you're talking about, right? You can see some of that TVL being locked up. I think that the team has a really good line of sight for token incentives that encourage the providers to maintain that data integrity and the service quality. And I think all of that being wrapped into a solid model that's really good for all participants of the ecosystem is what's super helpful.
Yeah, for those who maybe weren't paying attention, Marcin, what you guys went from, I think, out of the top 10 to a top 5 Oracle in the span of maybe a few months. Like, what were some of the big drivers in terms of applications that kind of got you to that point? Because you guys have just had a monster BD strategy. We see you at every conference. You're talking to everyone. Like Keli mentioned, you've got the red jackets, so people always see you.
Well, we figured out how to clone people. That's how we make sure that we are everywhere.
But wait, really quickly. Did it go from limestone to RedStone because nobody looked good in like a lime green color? I feel like that would be.
No. Initially, we were called Limestone to showcase that all the data that we serve is also stored on Arweave, and it's forever. Like, Limestone is something that lasts very long as a resource. But in early 21, so I think the first pre-seed announcement is already with RedStone, I believe. Around that time, we got approached by a project called Limestone that was out of Southeast Asia that launched the token after we picked the name and asked us to change the name, basically, like their founder asked us to. And we respect the open source and, open approach in Web3. So we started thinking about an alternative name. And Jacob has 2 children. The older one is a boy. he was playing Minecraft with him, and it turned out RedStone is a resource that you need to build any cool stuff in Minecraft. So it's the same as you need in Web3 to create cool DeFi protocols. That's the reason we changed to that name. And it happened to be that red vests look very well, so it's a good coincidence.
I love that story. Thank you for sharing that.
Sure, happy. Mike, coming back to your question, I would say it's super hard to start as an Oracle because no one knows you, no one trusts you, right? Like Oracle is a big trust business. So getting the first client is very hard. Delta Prime, that was the very first client of RedStone that launched in January 2023 with our first production-ready implementation, was sort of maybe not incubated, but had a very strong support from us in the early days in terms of the design, the expansion, and basically we just were working with them shoulder to shoulder to also prove our technology, which happened to be a very good success back in the days in Avalanche, and people recognized us. Then all the good investors from VC World and the Angels round came also to the cap table, which was another stamp of approval. But the inflection point for RedStone is, I believe, liquid staking tokens skyrocketing in 2023, where Lido and Rocket Pool were supported by Chainlink, but any new LST back in 2023, like Swell, Stader, Stakewise, Stakestone, and I could probably go on with a longer list, also with the ones that didn't make it to 2024. But in 2023, that was a hot ticket. We had Chapella upgrade, naturally, and staking was like a huge primitive. And by the way, I believe people still don't appreciate staking enough in comparison to traditional markets, because in traditional markets, I don't know any similar primitive where you can have exposure, for example, to Tesla stock and then still stake it and earn yield on top of that, which is like a very cool concept. And we spotted that early on, and we identified that these, in general, yield-bearing assets have a very, very different pricing, let's say, dynamics, because people don't trade them that often. Where Bitcoin, Ethereum, Litecoin, all these other altcoins are for speculative purposes, and people trade them a lot on exchanges. So the price discovery happens all the time. With these yield-bearing assets, people buy them and usually hold them for a longer period. So there is not much volume. And actually, a lot of trading happens on chain because these assets many times don't have the centralized exchanges support, because centralized exchanges launch assets that have a lot of volume because that's how they make money. So they have also no incentive to add these kind of tokens to their platform from the first place. Therefore, with these liquid staking tokens in 2023 and then in 2024 liquid restaking tokens, we found a perfect product market fit because thanks to our modular design, we could tap directly into decentralized exchanges when it comes to the first module, the data sourcing module. And this is where a majority of exchanging of this yield-bearing asset happened. So that's where you needed to pull data from to create a robust price feed. And we could also monitor slippage. If slippage was going outside of a specific boundary that we set, we knew someone was trying to manipulate the price. Because imagine a pool with only $1 million of liquidity. Actually, it's a pretty easy pool to skew the price with if you do a large trade one way or the other. And you also have wash trading, which impacts the slippage as well for a short period of time. So I would say finding LST as our product market fit was the moment where we got a lot of interest from Pendle, from Morpho, from Venus, and many other blue chip protocols that first did their due diligence on RedStone, couple of weeks. But once they realized our infrastructure is robust, started working with us, and now we are good. They're good clients of ours, and they're very happy with the service.
Maybe just to wrap things up, because we're getting up towards the end of time here. On the RedStone front specifically, what should people be expecting? And then because you guys saw LSTs and LRTs very early, from a DeFi perspective, what Keli or Marcin kind of how do you see the landscape changing, or what do you think the opportunities for an Oracle like RedStone to kind of adapt to the shifting market within DeFi?
Well, Bitcoin staking. When we are recording that episode, Babylon hasn't launched yet, but is soon to launch. And there is like many other similar players on the market. There are players such as Lombard, Pump BTC, P-Stake, and so on, creating liquid staking on Bitcoin. And Bitcoin, as you know, I'm going to say it, is like the biggest meme coin out there. Mm-hmm. Like basically the value of one Bitcoin has no ceiling. So as long as people believe in it, it can go through any roof out there, even to another galaxy. So there's a lot of value to be injected into DeFi itself. And again, surprise, surprise, liquid staking tokens on Bitcoin don't have much trading because they accrue value over time. So again, our strength of being able to tap directly into DEXs. And this year, we also introduced tapping directly into smart contract exchange, which is another whole conversation, like taking the contract rate versus the market rate, just allows us to be more flexible and customizable when it comes to actually consuming the data feed by the DeFi applications. And my understanding would be that in later 2024, we are going to see a lot of new Bitcoin-related primitives and implementations around DeFi that will have also, for example, custody as a big play, especially with the recent FUD around wrap Bitcoin. And the second area is going to be the second phase of liquid restaking tokens, when EigenLayer actually unlocks Eigen as the token itself that is going to be transferable. Symbiotic and Karak launch mainnet, and then you're going to have a whole matrix of various LRTs out there on the market.
I think that's fascinating. I think the other thing to note is that the way that RedStone's been designed and the way the team's approaching it is that there's a bunch of use cases that I don't think have even been thought of yet. And I think as some of this new technology comes out, OEV, EigenLayer, some of the stuff Marcin was alluding to, I think that the ability for RedStone to provide value there to end users and to other organizations building on new technology is a little bit yet to be seen. But I do think that they're going to be able to compete in a very unique way against a wide variety of projects that are using new tech that we haven't really seen yet in the DeFi space.
We definitely agree. Marcin, maybe just to cap things off, for people that want to get involved, to follow you, where should they be going? And Keli, same to your side.
Before we finish, I just want to bring a funny story here about also Mike Arrington, actually, that was mentioned in this episode. I wasn't aware that he was the founder of TechCrunch and Crunchbase when we started talking with Arrington Capital. Okay, being honest, initially I didn't even know that it's his surname. So I wasn't aware of the whole story. Only when we had the first call with the fund, then I learned a little bit more. And 2 days ago, together with my fiancée, we are watching Silicon Valley series. And then I see an episode with TechCrunch Disrupt and him being over there, right? Like a few years younger, let's call it. But that was like a funny full circle, right? After already Series A, seeing him over there. Talking about engagement with RedStone, we are running RedStone Expedition right now. If you go to our website and hover over Expedition, you can get involved and start earning RedStone Gems, which is our points program. If you want to follow what's happening with RedStone, go to RedStone_DeFi. And if you want to see what I'm trying to convey over Twitter about Poland being great and how beautiful it is to build an oracle, then you can go to Marcin_13 on Twitter as well.
That's great. In terms of Arrington Cap, we're on Twitter at Arrington_Cap. I'm at Keli Callaghan, KeliCallaghan on Twitter, and Mike is at pretty basic at Arrington. And we're talking about the companies that we're investing in and what they're building and what they're working on. Marcin, I agree with you. Poland is a super interesting place. Very diverse and dedicated group of founders, and it's a beautiful country.
Thank you, guys. Appreciate it. We will put those all in the show notes and look forward to seeing you on Twitter and at the next crypto conference.
Thanks for having us, guys.
Thanks a lot.